it's Mike over at Cross Country Mortgage, and it's Monday morning, July the 21st. Time for your Monday morning mortgage update. I always try to give you insight, tools, tips, tactics on what's happening in the real estate mortgage industry so that you can go out and make those wise decisions when you're buying, selling a house, or working with people that are buying and selling a house. So let's talk about what happened last week and what's going to happen this week. I'm going to go right to the charts because we've had some really good movement over the last 3 weeks. This is a graph that shows the trading of mortgage-backed securities in the bond market, 6-month average. Money flows in one or two places, the riskier stock market or the safer bond market. And when money flows into that safer bond market, mortgage-backed securities are traded at a higher level. Mortgage rates are determined by the trading of mortgage-backed securities. So when we see the green bars here, and each one of these bars represents 1 day of trading, when we see the green bars move up, that means money's flowing in and mortgage rates are going down. When we see the red bars moving down, money's flowing out of the bond market and mortgage rates are going up. This is a live feed. You can see at the top left there, 22 basis points up today. And that graph, that bar at the right side of this graph is a nice little thick bar, means that we've seen rates improve today. Now, last week, we saw rates improve by about 10 basis points. That's those little tiny green bars moving up. But look at the 2 weeks before that. We actually saw rates get worse. So what this shows you is we just have a very volatile bond market. And that's what we've been seeing for quite some time. So what do we attribute to the improvement last week? We actually saw inflation numbers hit expectations. That's good. They didn't get worse. We know that inflation is the death of mortgage rates. And we saw a report that came out that tried to project what inflation was going to do in the next year. And the majority of people that took this report, the experts said that they think inflation is going to go down in the next year. Hey, this is positive for mortgage rates. So if we can see inflation improve over the next year, then that's going to be a good sign for mortgage rates. So what are we looking at this week? What's on the agenda that's going to possibly move mortgage rates? Kind of a light trading week, actually a very light trading week. We've got some housing data that's going to come out, but we got some political stuff and then a treasury auctions. Let's talk about that. The political stuff is the tariffs. August 1st is the deadline, a hard stop per Trump, that if countries don't negotiate and come to agreement with the U.S., those tariffs are going into place. Now, Trump has kicked the can down the road, but it's the first time he said it's a hard stop. And so our country is going to come out this week and the next couple of weeks and say, okay, we're ready to come to an agreement. Or are they going to try to call his bluff and wait till August 1st? If we see some news that maybe the other countries or a majority of the countries are starting to come to an agreement with the U.S., then that could be a strong indication of at least what's going to happen in the future. Good for the economy. We really haven't seen the tariffs that have been put in place, in fact, impact inflation. Prices really haven't gone up. So really don't know how it's going to impact long-term. A lot of these agreements, when and if they come in place, is going to give us some insight on that. The other thing is the European Union has their version of their Fed meeting this week. Ours is next week. And so the expectation is the European Union is going to start putting into policy some of the things to offset the tariffs that are eventually coming. The other thing is Jerome Powell and our Federal Reserve Chairman and Trump are going back and forth. There's such light data, economic data, that war between them, that back and forth, that drama is probably going to be in most of the headlines. And so Trump can't just get rid of Jerome Powell. He may not like what he's doing at the Federal Reserve, but Trump can't get rid of him. Powell's protected. But will Powell indicate that he might step down? There's some signs that maybe he's just getting sick and tired of this. Who knows? We'll see what happens this week. Jerome Powell is going to give a couple speeches. And then there's a bond auction on Wednesday. So the Treasury pays the bills. The Federal Reserve sets policy. And the Treasury pays the bills by selling bonds and notes. And there's a 20-year bond auction on Wednesday, which is very similar to the 30-year mortgage-backed security. There was an appetite for that last time it sold last month. And is there going to be an appetite for it this week? If there's a strong appetite for it, that is actually positive for a lowering of mortgage rates. So we'll be watching that auction very closely on Wednesday. Like I said, light economic week. We'll be kind of picking and choosing the drama and the data that comes out. We're starting the week floating, And if we see some changes, obviously we'll move to a locking position. But generally, the consensus is there's a better indication we could see rates improve this week or at least stay flat. If you have any questions on your mortgage or your mortgage rates and you're confused or you're not getting the right information, I am a mortgage lender, mortgage banker. I've been doing this over 25 years, and I'd love to give you some insight, help you out on your needs. If you have anybody that you think could benefit from this video, please forward it to them. Have a great week, and we'll talk to you soon.